This was a presentation on access to finance for smallholder farmer organizations at the 15th African Fine Coffee Association Conference and Exhibition in Addis Ababa, presented by Edward Masawa, the General Manager of the Tanzania Coffee Farmers Alliance, together with his colleague Tony Mugoya from the Uganda Coffee Farmers Alliance. Hans R. Neumann Stiftung was established by the Neumann family. The family has been rooted in the production and trade of coffee for decades. The foundation has been implementing projects for the last 25 years. Currently, HRNS runs projects in 14 countries, benefiting 160,000 smallholder families. More than 10 years ago, HRNS started implementing projects in Uganda and Tanzania addressing the challenges of smallholder coffee farmers and working primarily on improving their livelihoods through a combination of organizational development, climate-smart agriculture, and access to essential services. These services range from access to markets, inputs, technical assistance, and of course, financial services. Through these projects, 2 farmer umbrella organizations were formed, the Uganda Coffee Farmers Alliance and the Tanzania Coffee Farmers Alliance, together benefiting more than 70,000 members. On the side of smallholders, the limiting factors for accessing finance are many. To name just a few, smallholders are not legally registered, since the majority of farmers are not organized in registered structures. They lack formal collateral needed by financial institutions. They also lack capital in order to attract agricultural loans. In addition, most smallholders are not financially literate and have challenges to keep financial records, which are required by most financial institutions. Another challenge is that interest rates from commercial banks are above 20%, which is too high for smallholder farmers to pay. However, quick cash from informal financial options, such as middlemen, also contribute to farmers losing up to 40% of the value of their produce. This leads to a vicious cycle of poverty where smallholders earn less and less and remain in debt. On the side of financial institutions, we also see a number of limiting factors. The agricultural sector is still seen as a very high-risk sector for commercial banks. But often the banks also have little understanding of the respective crop value chain. Financial institutions are usually far away from the farmers' areas, and they don't have enough manpower to follow up in the field. Last but not least, there is no crop insurance specific for smallholder farmers. All in all, we can state that there is a lack of adequate formal rural financial services. This is a sample cash flow of a typical Tanzanian farmer. As we all know, the typical East African smallholder coffee farmer grows a variety of crops. The diversification of crops and incomes helps farmers to overcome seasonal cash shortages. As you can see on the graph, there is no income from coffee for 10 months of the year. Yet there are many costs to cover. The combination of both income sources is vital for securing short and long-term needs. Income from coffee is usually used for school fees and investments, while the income from food crops is used for purchasing inputs to support the production cycle of all crops. The organizational structures, which were established in both Uganda and Tanzania, help individual farmers to organize themselves in economically self-sustaining farmer organizations. These organizations act as small economic enterprises and provide essential services to their members. At the primary level, producer organizations provide extension services, encourage exchange among farmers in farmer field schools, engage in internal savings schemes, and act as a first collection point for their produce. At the depot committee level, output and input are aggregated, meaning coffee is bulked and inputs are sourced in larger quantities. At this level, farmers also gain access to financial services. Depot committees are legally registered organizations with internal savings schemes, bank accounts, and their own farmer-to-farmer extension systems. At the level of the apex or umbrella organizations, farmers can access international markets, can hold service providers and governments accountable, advocate for their members' interests, and gain access to financial services at a larger scale, for example for crop and marketing financing. Once again, the services which umbrella organizations like UCFA and TCFA provide range from extension services all the way to access to finance. Firstly, we offer extension services through a farmer-to-farmer extension approach. Secondly, we facilitate linkages with input suppliers for bulk purchases and after-sale services. These linkages guarantee quality of inputs and maximize return of investment to the farmers. Thirdly, UCFA and TCFA are in charge of coordinating value chain services and value addition, such as processing and quality control. We also provide up-to-date marketing information to farmer groups and individual farmers. In addition, we establish market linkages through a bulk marketing approach, which reduces price risk and maximizes return through economies of scale. And of course, we assist in linking farmers and their groups to financial service providers. All these services are interlinked and interdependent. In practice, this means that before farmer groups can access financial services, they need to be trained on production know-how, financial literacy, and market access. Currently, these organizational structures provide a variety of agricultural financing options. For example, they offer input and asset financing to individuals and groups at a small scale. They also provide crop pre-finance and marketing finance for bigger farmer organizations to be able to finance first payments for parchment collection. Lastly, they secure social economic finance for individual households to cater for consumption needs. Having access to crop and marketing finance enables farmer organizations like TCFA to bulk the coffee and sell it to the national auction. This translates into a 40% higher price from the auction compared to the farm gate price, as you can see on the graph. The auction price is after all deductions. Before getting access to formal financial services, farmer groups can and should address their financial challenges internally. In our case, this has been done through different types of savings schemes. In Uganda, farmers participate in Village Savings and Loan Associations, or VSLAs. In Tanzania, they establish internal savings within their farmer groups. These savings can be used as collateral for getting formal loans. Farmer groups supported by HRNS and TCFA save up to $20,000. There are also more formalized saving and credit cooperatives, which are linked to cooperative societies and depot committees. We have already worked on several initiatives to improve access to financial services for smallholder farmers and their organizations, and will now elaborate on these a bit more. To name just a few of these initiatives that UCFA and TCFA have worked with: a mobile phone-based application for capturing farmers' track records. This is an alternative risk management tool in place of depending on traditional collateral. Deepening financial inclusion projects where farmers use group guarantees as collateral for borrowing. In this case, the individual does not need personal collateral as long as they are a member of a UCFA group. Crop pre-finance and supply chain financing for first payments of parchment coffee from TCFA and UCFA to their members. The issue of financial literacy needs to be addressed. This is also an important requirement for financial institutions. For this reason, we have provided training on financial record keeping, cash flow planning and expenditure forecasting, development of business plans, loan management, and farming as a business. In order to address the challenge of availability of information, UCFA has introduced a variety of digital technologies, which make smallholders more attractive to financial institutions. For example, UCFA is working with a central database which provides digital records of farmers' registers and enables transparent mobile money payments. So instead of paper-based receipts, farmers now receive SMS-based information of payment details and mobile money. Farmer organizations are crucial for improving smallholders' access to financial services. However, These farmer organizations need to engage in good governance and have to be run in a transparent manner. They need to have a business mindset, a sound financial management, and they have to capitalize. Farmer organizations also need to have access to other production and commercial services such as extension, value addition, and marketing. Ladies and gentlemen, we can close the gap between farmers and financial services. Let's work together.